गुड इवनिंग एंड वेलकम बैक टू पैसा बोलता है। पैसा बोलता है में फिर से आपका स्वागत है। द रिजल्ट्स फॉर द फर्स्ट एफएमसीजी stock considered bellwether for all FMCG stocks, that is Hindustan Unilever, came out last week. Hindustan Unico quarter one results were not up to the mark, does not justify a P/E ratio of more than 60, which is where the company is now trading. I have always advised against Unilever, and this is why I have asked you not to buy Unilever in India. The total profit rose by only 6.9%. So the profits were 2,556 crores. So, marking a 6.9% increase from last year to this year. The total income reached 15,679 crores from 14,757 crores. This has been reached not by selling more soaps, more shampoo, and more ice cream. It has been reached by increasing the prices of products. So, if you look at the products as two, volume versus price realization has been higher. Therefore, the turnover has gone up, profits have gone up. If you measure it as volumes are still lower than what it was before the pandemic. And they have resorted to shrinkflation, that is reducing the quantity to keep the prices same. See, the total expenses were also higher at 12,167 crores compared to 11,531 crores. So you can have an idea that without increasing prices, they wouldn't have had such a positive result. So to gloss over the matters, Rohit Java said the FMCG industry was showing a gradual recovery. That means it's not recovered fully. There is a gradual recovery. Things are not as bad as they were last year, but they are not robust. The home care segment of HUL recorded a revenue growth of 10%. That means measured in turnover, it has gone up by 10%. That means volumes, they are very silent on the volumes unless you go and ask them. Volumes have not grown. In fact, volumes remain lower. Therefore, what has happened is in home care, even though revenue has gone up by 10%, volumes have declined. In beauty and personal care segment, the revenue saw only is 4%. That means volumes have definitely declined. In food and refreshment category, they sold Annapurna and they are saying they have registered a 5% growth, primarily driven by health food, drinks and food solutions. Health food drinks is what they bought from Glaxo, basically Horlicks. So basically, they have grown their Horlicks business and their food solutions business. They have also sold out Annapurna brand. So basically, what it means is the prices have been increased, volumes have declined, people are consuming less. This is what I have been telling you all the while. So if only 6.9% there is a profit increase, and there is saying that in the near term outlook, FMCG is expecting a rebalancing. I doubt it between price and volume. So basically, there is not going to be double digit growth this year. If earnings do not grow by double digit, what is the justification for a 60 to 70 time multiple for your earnings? This is not to say if you buy Hindustan Unilever, you will lose money. All this says is that the prices will remain flat or marginally decline. So there is, if I put 100 rupees in a bank deposit, end of this year I am going to get 6 rupees. If I put 100 rupees in Hindustan Unilever, I am not going to get 6 rupees. It is going to remain as it is. So against inflation, you will lose. The mood of the market turns negative, the price will correct. Mainly FMCG owned by foreign companies, MNC, is a defensive proposition. That means you don't expect the value to fall, but you don't show any major growth. The company, it claims, will show delivering value to its stakeholders. Means who are the stakeholders? The stakeholders are primarily the foreign parent, because what have they done is they are saying after some time they have increased the amount of royalty as a percentage of turnover. This is not a percentage of profits. As a percentage of turnover, the royalty is going to go to 3.5% or 3.45%. So every time Hindustan Unilever sells 100 rupees, Unilever will get 3 rupees 45 paisa only for lending lending its brand. After that, when the profits are made, the Unilever will get 75% more money. And now it says after 10%, we are going to increase the royalty fees by 0.80 after 10 years. So basically, it is going to be 3.45% of turnover. What have you done? You have increased the price of your product. Therefore, turnover will increase even if volumes fall. And even before I declare profits, the biggest expenses, I have to add 3.5% tax. It is called royalty tax. Because he is lending the brand name, he is going to charge me 3.45%. So basically, I am going to pay from my cost of doing business will increase. My margins will shrink. Meaning if I am a shareholder of Unilever, my margins will shrink. My margins will shrink because of two reasons. Because of a K-shaped recovery, and you are only dealing in the premium segment, I am going to lose market share because you have raised prices. To add insult to injury, I have to pay premium. And these two are the reasons why my net profit is down to 6%, 6.09. By only eliminating royalty, my net profit will go to 10%. When it is so crystal clear, there is no way Hindustan Unilever will give you a 10% return over the next 2 to 3 years. If there is not even 10% return, and then I get benefit of some dividend, it does not make sense to hold this stock. This stock is highly overvalued. At this time, it's trading more than 60 times earnings. It is better to own Indian Tobacco Company, which does not pay any royalty to BAT, and all the money is mine, and the valuations are less. Profit growth is faster. So it's a no-brainer. This is what my brother was saying in this channel. So instead of considering Hindustan Unilever, it makes eminent sense to consider Indian Tobacco the way the current situation is. Thank you for watching पैसा बोलता है। आपने इस पॉडकास्ट को सुना, इसके लिए मैं आपका आभारी हूँ। आप इस वीडियो को लाइक कीजिए, अपना कमेंट लिखिए, चैनल को सब्सक्राइब कीजिए और बेल नोटिफिकेशन दबाएं। अगर ये सब आपने किया तो आप इस वीडियो को अपने दोस्त और रिश्तेदार के पास भेजें और उनको देखने के लिए बोलें। नमस्कार, धन्यवाद, जय हिंद।